I have the pleasure today of speaking with Jenny and Johana about impact investing. Although fintech in LATAM is inherently very much about financial inclusion, given that the first wave is all about creating services that don't exist yet, there's definitely many models and things to keep in mind in terms of what is the actual optimal way to cause the most impact with the money we invest in the region. So just to start off, I'd love to learn about Johana and Jenny's. Could you please tell us about your backgrounds and what you do at Floursih and Elevar?
Sure. Hi, everyone. Thank you for having me. I'm Jenny Johnston from Floursih Ventures. We're a global financial health-focused fund solely funded by Pierre Omidyar, the founder of eBay. We recently spun out of Omidyar Network, a large, again, global impact investing fund, and we're given an additional $300 million to invest across the US, Africa, LATAM, Southeast Asia, and India. We have a flexible capital model, and what we really care about is backing values-aligned entrepreneurs that help us drive democratized access to appropriate customer-centric financial inclusion and financial health tools.
Great. My name is Johana Posada. I'm co-founder and managing director of Elevar Equity. Elevar Equity is a human-centered venture fund. We started in 2006 with our first fund. That was a microfinance fund. And since then, we've raised 4 other funds, invested in about 35 companies. We have an AUM of about 300 million. And we say we are human-centered because we really think about the end client, who the end client is, how is he benefiting, what are their needs, and we also focus on the entrepreneurs that we back.
So just to start off, why don't you tell us what are the key differences and criteria you keep in mind when you deem an investment a social impact investment?
Sure. So I think, to start, we would analyze the potential transaction as any other venture capitalist or investor out there. We're looking at the team, we're looking at the business model, we're looking at their platform and growth, their data analytics and capabilities, et cetera, et cetera. I would say one of the key aspects for us, and when we talk about the Elevar method, is really the clients and really understanding who the end client is and what's their needs. And a lot of what we do there is we actually go out in the field. And we talk to these communities and understand what are their challenges, but also what are the opportunities within these communities. And so I think, at the end of the day, it's really focusing on the end client and ensuring that the business model, and this is key, has the right distribution channel, because at the end of the day, it has to be a product that's affordable. And then you look for massive scale. So I think that is key. And then I guess the other aspect is to think about impact metrics and community metrics from the beginning. So as you're looking at the investment, you are gonna follow on those metrics, in addition to following financial metrics and IRR and all of that we do as well.
Yeah, I'd say similarly and also different in a sense. At Floursih Ventures, we don't necessarily think about impact in terms of the end customer. It doesn't have to be a specific income level of an end customer, but we think about impact sort of on 2 main planes. One is that direct impact. We're very similar to Elevar. We try to get into the field as much as possible, which we think is just really, at the end of the day, good business, right? You're understanding who your end customer is and what products and services are actually helping them. And then our loftier goal, and arguably kind of our main metric for impact, is sector change, right? How are we fundamentally driving forward the frontier of financial services and fundamentally kind of changing that industry? That's a little bit harder to calibrate. That's a little bit harder to have a KPI for. But as we think about the business model, we're looking for what's new, what's different, what's, again, driving that frontier of financial change.
So this is a perfect segue into my next question. I know that, Johana, you invest a lot in India. Jenny, you invest all over the world. Given the models that you've seen in other regions of the world, is there any particular model that you think is lacking in Latin America and that you think it's very interesting that we adopt, or vice versa, something that we're doing better in other regions? I realize it's different populations and different needs, but what are your insights across the world?
Sure. Happy to kick it off. So part of being a global fund is being able to track those trends across different regions. As well with that sector change aspiration, we're very thesis-driven investors. We're not looking for the hot, new, hyped business model. We're looking for really, again, what's that lever, that catalytic lever within the industry that's going to drive that change. And I think we've seen waves and trends within digital banking. For instance, we have 8 now globally, 2 here in LATAM, 1 in Mexico, 1 in Brazil, and then 6 across the globe. So we're able to track what's working in the business model, what's not working in the business model, and how we can have those cross-border learnings. I think digital credit is a huge space to innovate here in LATAM. I think embedded finance, business models that inherently start on the retail side, customer side, that we know try to move into financial services. One, because you've captured the attention. I think fundamentally we're in an attention economy right now, and those business models have a really easy cost of acquisition, and then you can build in a whole stack of financial services over time. I think we're starting to see those trends. We certainly saw them in the US, India, and Southeast Asia before. And I'd say something that gets me very excited within innovation here in LATAM is also insurtech. Inherently, I think that's a chicken or the egg model. Generally, if you're on the product innovation side, you had to wait for the carrier to back you to get funding, but funding wouldn't back you unless you had a carrier relationship. I think some of that's starting to change as we see investors looking to take a little bit more risk and really try to drive, again, that frontier.
Yeah, so let me start with the similarities. Again, going back to the client, I think what's very interesting is that we see the same kind of needs and aspirations within the communities and the underserved communities, be it SMEs or individual clients within India and Latin America, right? However, of course, when you just think about the market itself, India is huge, right? We can actually back a company that's doing credits to affordable schools in one of the states in India, and they can grow massively. And so our strategy in Latin America needs to be a little different, but we always back amazing entrepreneurs. One of the differences that I do note is that in Latin America, entrepreneurs tend to be much more brand focused and knowledgeable. They really, the other ones are just growing massively on scale. I think Latin American entrepreneurs are really good at brand. And I also think that one of the major differences that I'm starting to see in the market is actually data availability and how do you use that. So I think Latin America in that sense is more advanced. There's more data. The whole e-invoicing, for example, that is now in Mexico. It really started in Chile. It's in Brazil. It's going to finalized this year in Colombia. What you can do with that data and kind of the trust that that data gives you is huge, right? And India doesn't have that. Okay. And Latin America really is a leader there. And you can do a lot with factoring. And so there's a lot of SME services that I can see taking off in Latin America.
Great. And so just now that we're talking about, well, all the things that Latin America is more developed on and better at, let's talk about impact investing there in terms of how the field has evolved. Who are the other players that you think are very big and stepping in, and how does today compare to 10 years ago?
Yeah. So when I first started, this is back in 2004, impact investing wasn't even coined. So the difference from when I started and now is, massive. Day and night. It's been a huge evolution. It's now something that's being talked in major conferences. And as a lot of you know, especially in the US, you're having big funds like TPG, RISE, and Bain, and KKR, and all of these funds that are actually raising impact fund. And I think part of it is that there is an appetite from the investor side of saying, I want to, whether I'm a pension fund, whatever it is, I want to move capital into this space, and can I move $200 million? Who can I move it with a lot of these, funds that are raising $1 to $2 billion? Right. Now they have to place that money, and the definition of impact is going to be very broad there, right? Specifically in Latin America, there's been always the usual players. I think what also we're seeing is that there's a lot of funds that have been doing, whether it's tech investing or just general investing, that they see some companies and say, this company is doing impact, right? But at the end of the day, for me, it's also intentionality, and again, are you going to measure it? And that is one of the key things.
Adding on to that, I say, broadly, we all know Latin America is at a really exciting time, right? I think we have favorable winds in many realms. One of them is the crowding in of more capital. Right? We have the entrance of some larger growth stage funds, which I think is inherently going to allow earlier stage investors to step in and take a little bit more risk. I think with that, as we think about that, again, broader sector change impact, fundamentally, if we have more ideas getting backed, more ideas getting funded, we're going to reach more people. We're going to see faster cycles of innovation, which to us inherently is driving impact.
You keep talking about measuring and what are the things that you measure. Can you elaborate more on their specific KPIs that you think about when you look at, for example, a credit company or things like that from a community perspective, less so than the standard metrics we keep in mind?
Sure. And again, I mean, we do not only invest, we've done financial services traditionally, but we invest in other companies. So one of the challenges in the space is, how do you apply the same metrics to, companies that are doing healthcare or they're doing education, et cetera, right? But for us, we have a framework where we, again, look at the community, who's the community, right? Then we look at the innovation and the business model, and what is the key metric? And at the end of the day, is customer success, is a customer happy? That's gonna bring in that renewal of customers and making sure of that growth, and at the end of the day, it is gonna be a growth metric. So how many clients are you?
Okay.
Is it whether portfolio growth, whatever it is, it has to be a company which is, that's the outcome. But the two key ones have different metrics depending on the business model, effectively.
Yeah, I'd say maybe it's helpful to define what we mean by financial health when thinking around impact measurement. So some of this is continuing to evolve as we expand that strategy from financial inclusion to financial health, but broadly, we've defined financial health as 3 buckets. And when we look for investments, we're looking, okay, how is this product serving the end customer or serving the industry to, again, drive financial health? So one is helping customers manage day-to-day, week-to-week, month-to-month cash flow volatility, understanding their basic sense of their financial lives. Right? We know how difficult it is to get paid on the 15th, but your bill is due on the 13th. What do you do with that change of cash flow? So that's kind of managing and cash flow smoothing in that short term. Medium term, we know that things happen. People have shocks to the system. How do you think about managing through those, what could be derailing moments in the medium term with things like insurance, savings, low interest rate credit that avoid people from going to the loan shark or to their family in an embarrassing sense? And then once you have those 2 pillars, how do you help people build and accrue wealth over time for themselves and their family? So with that framework, when we look at products and services, we're thinking about, okay, well, how does this product actually fundamentally help the end consumer and help them live a holistically more financially healthy life? So some of that, I mean, from a scale perspective, has to do with those standard growth metrics, and as well, some of that has to do with, okay, how is this actually making somebody's life better? And we try to quantify that as much as possible.
Okay. And when you put your investor hat on, how do you think about the trade-off between social return and financial return when you make an investment?
Yeah, so we don't think that there's a trade-off, right? And I'm not saying that, throughout the market or in all deals there isn't, but we don't look at those deals. So if you think about an X and a Y axis, you have financial returns and impact, we're squarely in the one where you achieve both. And so for us there, the key again is going to be, one, you're going to have an entrepreneur that is going to be able to navigate and really build a very strong business. 2, again, you understand the client needs, but then you really are building a last mile. It's all about distribution and distribution of affordable products, so you build massive scale. And so again, take microfinance. We've had 2 companies that have gone public, right? And instead of increasing the rates, they're actually decreasing the rates, and that was increasing their growth. And at the end of the day, they were very successful IPOs. And so for us, we've delivered, top quartile financial returns to IRRs to our investors. And so we also, thinking about the broader, for us, it is a responsibility to get those amazing financial returns, because it is a way of attracting more capital into the sector and making sure that, funds like me or any type of funds are really attracting that capital, because that capital then gets distributed down to the clients and makes a difference in their life. And for me, it's almost the democratization of capital. And so it's our responsibility to make good investments, get good exits, return capital.
Similarly, demonstration effects cannot be overstated or understated. It's incredibly important. And to have demonstration effect, you need to prove that you can have a good business model and deliver impact. So I like to say, right, we need both and we don't compromise on either. There can certainly be a continuum of which we think about. Let's say we're going to step into an investment that feels inherently more risky. It's fully on the frontier. It's a new business model. It's delivering $1 a day microinsurance premiums across Africa and Southeast Asia that an incumbent insurance carrier would never think about penetrating that side of the market. That's an investment where we say, okay, if we think that we're not going to be able to crowd in this type of capital yet, and it might be a bit of a longer term partnership, which inherently might affect IRR or some other traditional return metrics, is this company, is this business model, is this product innovation, again, kind of fundamentally demonstrating the fact that we can reach a different level of customers, that we can fully democratize the system. And in that case, we might be willing to take slightly less returns. But in general, when we're looking to make an investment, the first thing I'm looking at is the business models. It's interesting.
Yeah.
People oftentimes think, oh, impact investing, I'm gonna tell you this soft, lovely, heartwarming story. And I love the heartwarming story, but actually what I wanna know is your unit economics and your cost of acquisition and your growth metrics. And then I also wanna know how that fundamentally is serving your customer. So really, again, I think it goes back to that demonstration effect.
But I think one key here, and I envy Jen in a way, because you can do a lot of that with permanent capital. When you're a 10 or 12-year fund, whatever it is, you need to exit. You have the pressure, so you have to think about your investments within the timeline, and those that are going to grow and are going to have an exit. So you can be definitely more innovative, and as you said, have more tools in your box. We're a little more constrained.
And see, that's the benefit of our model of having a single LP. Is we're fundamentally able to be a little bit more flexible, and it's fortunate that our LP happens to be an entrepreneur and an engineer himself, and understands that sector change takes a long time. To be fair, we need exits as well, and we're going to be driving for that financial return, but we are fortunate that we have a little bit of a longer-term partnership mentality.
And Pierre actually was the anchor investor in our first fund and has been supportive in the follow-on, so he's...
That's great. Well, my final question was about, my next question was about managing risk, and you just elaborated on that. If there's anything else you want to do, do you have a higher tolerance to risk if there's a higher impact for social return? Jenny, you talked a little about it, but if there's something else you want to...
Yeah, I'd say, in general, if we feel like this is something inherently new and exciting and is delivering a truly customer-centric, and people talk about customer centricity all the time, but right, if this is a lending company that is figuring out some form of underwriting innovation that allows us actually to offer interest rates that aren't incredibly high, that's the type of risk, if it's a new business model, that we're willing to take. Because again, we think that in time, if you keep the customer at focus in the short term, that's also what's going to pay off in the long term, rather than just thinking about short-term gains. So inherently, if something's a little bit more risky, we're still willing to take that step and go in, because we think that can drive impact in time.
I mean, I do think our LPs expect us to push the envelope a bit. In fact, again, initially we're a microfinance fund, and the second fund, while everyone was moving into microfinance, we're actually moving away and investing in, SMEs and credits and payments in Peru, et cetera. So we've always been trying to take on more risk, of course, with an expectation of return, but we are constrained again with fund life and those things. One additional risk I think we're very conscious about is reputation risk. And just making sure, there's, again, can we back business models where the interest rate is extremely high, 500? I mean, there's models here in Mexico which are 1,000 return interest rate, right? You can't, because there is a reputation risk and expectation. You've got to go back and report, to your LPs, and again, they're aligning their core beliefs to what you invest. So I think reputation is very important for us, right? And that's an additional risk that I would highlight.
So looking forward, how do you think social impact or impact investing will continue evolving 10 years from now? What's your futurist view on what's going on?
I think a lot more people are probably going to realize they were impact investors all along.
But again, it's intentionality.
Yeah, but intentionality is really key. I mean, I think, as Johana alluded to, some of the larger, more traditional funds who are opening up intentional, impact-focused pools of capital is really exciting, right? It's continuing to make that more mainstream. I think in time we might start to see vehicles that are a bit more retail-focused, that allow people to align their long-term financial aspirations, which is, well, what makes them feel good and the change that they want to see in the world. So I'm hopeful that that continues to drive, and people who not only have personal wealth, but again, to the retail side, people might start to get access to cap tables in a new way.
Yeah, I mean, I think it's a growing sector. I think that, again, you're going to have more funds, and again, there needs to be a coherency in the sector. But at the end of the day, what we do is just good investing, right? Really understanding the clients, again, getting into the weeds in emerging markets. And you know, this is a massive, I mean, if you think about just a consumer class that's coming in that massive scale, you know, we've got to be there and prepared to really address that. So at the end of the day, for me, it's just a convergence into, it's going to be good investing. I don't know if it has to be called impact investing in the future. It's just people, and I do think that, again, investors are getting to a point where they say, I'm going to align, that happened with the old industry, and I mean, it's happened all across. I'm going to align my values to this. Now, what does the industry need to do? We need to deliver, we need returns, we need, you know, and in that sense, for me, if that's the case, then you're going to see much, much more growth.
And I'll add on to that quickly. I think broadly within this sector, we are really starting to see a cross-border globalism in venture capital, in early stage capital that's willing to maybe start from the US and move into LATAM, or start in LATAM and go to Asia, and vice versa. And I think that convergence is as well really exciting, and is going to open up people to more fund flows, more opportunity. And I think it's also inherently changing the dynamic between investor and entrepreneur. I think for the first time, entrepreneurs are starting to have that power balance equalized, where they're able to look around the table and say, who are those partners that are values aligned to me? Because I suddenly have choice, right? I suddenly don't just have the local angel investors or the family offices, but I now have some global funds or some regional or local funds who are willing to go in earlier and to be that partner to me. So that makes me hopeful that as well, the investors that are very much aligned to what this business is doing and why are going to continue to have a competitive advantage moving forward.
And also, is there a specific technology in LATAM, or I guess Asia also, that you think will continue to leapfrog the US and Europe? Like, we've seen this in payments in certain
and even cell phones, like, you know, smartphones. It's amazing. We weren't a fintech investment. We really started investing in tech-enabled companies when we saw that, you know, you're in whatever in the field, and people have phones, and so they completely, you know, leapfrog. And I think, you know, you talk more about technologies, but definitely, you know, and frankly, that's, I mean, for me, that's one of the, I see that more in India as well.
Mm-hmm. Okay.
Yeah.
And I think some of that as well, as we look holistically at the system, some of the favorable regulatory wins and the conversations that we see happening here in LATAM that are opening up innovation, things like open banking and instant payments are fundamentally really exciting, that are market leaders on a global scale.
Awesome. Do you want to talk about more regulation as well? Anything that you think has been changing in other countries that gets you particularly excited besides in Mexico?
Oh, no, excited.
Nothing exciting, okay.
Yeah, I mean,
I think Mexico has been leading.
Been leading?
With the
Okay.
fintech law, I mean, you go to Peru, you go to Argentina, you go to all these other countries, and they really are looking at Mexico as, you know, one of the key pillars, right, from where they can start. That has, you know, put some thought into the regulation.
yeah. My sense, I've been workshopping this idea and thought it's not fully baked yet, but my sense is that Mexico's in a bit of a leapfrog moment. Across LATAM, I mean, Brazil has led the way in so many different ways in terms of innovation, entrepreneurs, right, market size, as well as crowding in global capital. Mexico is right there. Right? We have portfolio companies, other investors from outside of LATAM that are looking at blue ocean, huge opportunities, big markets, really strong entrepreneurs, very strong employment pools. Mexico is number one on, it seems like, everybody's list. So I think that acceleration that we've seen within the fintech world is only going to continue, which makes me very, very excited and very bullish on what we're seeing in Mexico.
Great. Well, it seems like we have a few minutes left if anyone wants questions from the public. No questions, sorry. Okay, well, thank you, everyone.